Good morning, guys. Hopefully you're all well. No picture today. I am bumming it pretty hard and I'm drinking my coffee, so I'm going to let that ride the way it is. Move the chat over to this other screen real quick here. So I was doing earlier. I can make sure I can watch it real time. Hopefully you guys are good. And let's go ahead and get the charts up, right? That's what you're all here for. So we won't waste too much time on chit chat this morning, which I know you guys certainly will appreciate. And let's just go with screen 2. We'll go over to Bitcoin and we can delete this. I was just putting it on Twitter for fun. Nothing like time pivot playing out. We've been looking for the middle to end of Feb to basically remain range bound. And now we're looking at potentially bottoming out later in the, the summer potentially, if this range were to hold. So we have some price action to talk about. Now, Bitcoin's really simple. We talked about this on the high time frames the last time we had a live stream. And it's one of those things where, what about chit chat? Yeah. It's one of those things where, a lot happens in between. Like when we zoom out like this and we take away some of the stuff and we just say, okay, we should be looking to de-risk in this region above 24/7. That was always kind of the goal. Knowing that we could go as high as 26,724. However, if you guys follow me in the group and you listen to what I say, I've always said that the time pivot for the end of February is the most interesting pivot for me, not necessarily price. We don't exactly have to hit our targets all the time because that's not how trading works. It's nice when it does pan out that way, but we ended up, up here in this region, gave up some key ground here at 22,810 and down you go. And we've been eyeballing some specific regions, right? No, not that one. I think, yeah, it's down here. Looking for this gold pocket, looking for our merged range, right? You can see that the point of control is now shifted up from this zone that was at 19.2, which I still think we're probably going to come down to this value area low, which is in the upper 18,000s range, in low 19,000s, right? And so we're at 19,526 on a low of the day. And I did pull this up. And the reason I did was I wanted to show where the gold pocket was at currently, and you can see where it is, right? So if we were to look at this in terms of time, you can see that this would give us all the way out till the end of March potentially to rally back up to a local gold pocket in that instance, which I'm not necessarily expecting. However, we should always be prepared for that. So for me, just watching this with a little bit of interest to see what kind of reaction we get out of this region. I have scalped some longs today and yesterday. Just really quick in and outs, right? Not trying to do too much with it. So 3 wins, very small position size because we are working underneath the pretext of quite a bit of volatility and you're trading against the trend, right? The trend is down right now. So when it comes to my trading plan, I haven't exactly been shy about what I've been looking for. And, since I started making content back in when was it? 2020 or 2019 was the first time I made a YouTube video, I think. 2020 was a great year for content. I wish that channel didn't get banned, lost all 270 videos, but we've got a new one up and it's up and running. So TikTok, however, I used to say it's the only Bitcoin trading analysis you're ever going to need, and that I'm going to tell you guys exactly where price can go and when it's going to get there, and you're still going to fuck it up. And I don't mean that rudely, but people get lost in this day to day and they forget that the overall thesis of this is if we're going to see a move, which is a very aggressive move, you have to have a reversion back to the mean. We should be looking for similar volatility that we had in the prior session, which was our prior 6 months volatility from the August high to the December low here, or November low, excuse me. And that gave you the timeline for what we were looking for here. So now we're coming into this looking at it as a range as a whole. Now, obviously, there can be deviations above the range, just like here, and below the range. So will this be the exact low for this move? Honestly, I don't know. My theory is if we lose this gold pocket here right around like 18.8, if you guys recall, we had a really key swing fail down there at $18,880.50. I'm just going to go ahead and put that number on the chart real quick, and we'll talk about that. That was like a 4-hour. That was way back in the day when we were trading, and you can see it comes in right here. So I'm going to get rid of this and this real quick, and what you'll notice is for a long time, we did not close below this level on like a 4-hour. I believe it was right here. This was the key area. Yeah, I believe. Oh man, I think it was 18,880. Pretty sure it was. Could be incorrect, but I doubt it. Yeah, this was the level we were watching for quite a while. This move right here was really, really nice. I remember trading that one, and you can see it remains really key. So we know that this like $18,000 and $800 region is pretty important, right? And if we were to give this area up, obviously you have this like local peak high here, but I'm really starting to eyeball the 2023 open at that point and really just running all these stops. So that's what I would be looking at in terms of, you know, how I'd be trading this level to level, right? So that's what we're trying to do, is we're just identifying supports and resistances. I think that, you know, we've got this gold pocket we just mentioned down here. We should be eyeballing it. I'm gonna get rid of 18,880 because we just don't need it. You lose this gold pocket and you're losing that merged range value area low. You know, the easiest way to do this would be probably to mark out your quarterly lows and see how they line up with some of the areas that we've been looking at. So if we go out to like a quarterly chart, right? What is that? What we're bouncing from right now? Is the Q4 open. So straight away, Q4 high, that's probably the most important level to me right now in terms of like end of the month. I would be bullish above 21,468, right? So straight away, we know while 22,810 is very important, we can get rid of it for now. I think the most important level on the chart is 21,468. And I believe there's another level locally we'll talk about if you want to get into the crackhead timeframes at like 20,400. That's fairly important as well. But 21,468, that to me is going to be locally just very important. You can also see why it was so important here in February. You can see that's pretty much our exact low. So if you wanted to mark the February low or the Q4 high, right? So we'll go ahead and do both. So this is going to be more of an educational chart build, but I think you guys do appreciate those. Q4 high, and it's also the February low. And you could pick or choose either one. You could either do the 21,371 or you could leave this at 21,468. I'm going to leave it at 21,468 for now. We're going to keep this somewhat conservative, I guess, in that regard. So 21,468 to me is just an absolute monster level you've got to have. And you can see why right here on the February candle. So going back to the 3-month chart, that's why that level is important. Then we have the 2023 open, which is going to be key, right? If we get back to the 2023 open, though, I really do feel like we're going to challenge this low, maybe even potentially make a new low. That doesn't mean it's going to like 3K, but, you know, everyone's been looking for about the same levels. And for us, it was 13,880 or, you know, 14K. Some people are looking for 10 to 12K. We're level. We kind of just take it one step at a time here. So 13,880 is still a big level. And then I'm looking for like, you know, is there a potential swing fail here? Will this resolve into what I've kind of alluded to, that this could all just be one giant range and we remain range bound with deviations to the downside and upside before any kind of takeoff. And the reason I bring that up is, again, you front ran that yearly pivot. We've talked about this before. You have all year to hit it, of course, because it's such a large session. But when you go out to the BLX, we have discussed numerous times. This chart gets it as well. Numerous times we've discussed the idea that this is potentially a very similar situation where you front run the pivot and then you rally late in the year potentially. But this basically implies you would be coming back to the local gold pocket and making a higher low, right? And that's all this is from the low to the high. We extend it over. There you go. New yearly pivot, off it goes. So very similar price action. You know, what would invalidate this idea of a higher low before moving on, you know, double bottom, whatever you want to call this. We just talked about it. what invalidates that is realistically living below this like zone of support on this merged range. And when I say living below, I don't mean just going below this like 18,800 level. You know, obviously the yearly open is there and we can start looking for taps of that level. Looks like more likely, I think we see that level 16,820. Yeah, 16.5, give or take 16.5. I think that then if you don't get this like SFP of these local lows here, okay, so we could just say right here, we could say if this doesn't hold a support even beneath the yearly open, these local lows, you can see how they are positioned here, right? Let's clean this up just a little bit. Dirty chart, we clean it up. There you go. You can see the wicks into this. You lose these, where are you going? You're probably going to take these lows and make a new low, right? So that's kind of the line in the sand. And what's going to give us that bias is if we start turning 18,800 into resistance. So if you came down below the range, into this zone, this becomes resistance. I don't want to be living here. I want to, unless I take these lows. Wow, that is a really, that's with the brush and the thing. Unless I take these lows and get a good swing fail, I'm probably not that interested in at least a leveraged position long down in this region. Nothing with a lot of risk. I just feel like there's too many stops to run at that point, and you'll probably make a new low and you can start targeting down here. So that's when that becomes relevant. So everyone calling for lower prices below the lows here. I do think there's several things we have to see before we can get that far ahead of ourselves. For me, you are coming into support. This thing's really kind of melted down. We should be prepared for some form of a bounce here, getting into the low of this range. And locally, 20,434 is going to be that level. You can see that we have closed the gap and that we had an untapped biweekly caveman pivot that I noted on my chart at 19,632 that was never tapped from over here, right? You can see how it never came back to it. It did come back and fill it in right here. So that's kind of where we're bouncing from now. But back to the high time frame chart. So we have our bias, what we need to see if we're going to see lower prices. We know 18.8 is very important. We know why these lows right here are extra important if we do see them. And then we have our short-term 21,468 level if we're going to actually see any kind of a move back up into this range right here, right? So we would just be pulling like so. And I'm going to do that. And you can see that, yeah, if you get back above 21,468, you know, 22.3, 22.4 has been resistance, but the point of control comes in right here, right around 22.8, which was the key level from before, 22.810, right here. Okay, so you see how this is all basically playing out. But one thing to point out is that fast move down, fast move up. Notice how there's really no support found until you're down in like this like 18.5 to 18.8 region. So bear that in mind. You know, we go back out to the quarterly chart just to do so again, not to muddy the water for you guys and jump around too much. But when we start looking at these quarterly lows, quarterly highs and lows, you can say, here's my quarter three. And hopefully you guys can see this all right. I do tend to use the dotted lines, and sometimes they don't come across as well, but hopefully you guys can make them out, you know, nice and easy. Quarter four low right here, right? So these have been very key points for us, quarter three and quarter four low. And then obviously we want the yearly open, which I have on here somewhere. Oh man, this one I don't play with too much. It's more of like the area that I keep like one specific chart, which is just my time-based analysis. This is the only place I do it. So all this other stuff that gets put on here, I don't put in folders, which now is biting me in the ass. So I'm going to go ahead and just add on the yearly open, right? Easy peasy. And the low here is 6,492. Yeah, we don't need to mark it. So these are the levels that matter the most right now. Just like high time frame, you know, million-mile view. you need this support to hold here, the Q3 and Q4 low, which is beneath our 18.8 level that we gave, if you recall. You go out to a daily now and you view this, but you can see why this area would be so important. We just add a little boxy box here, and it gets everything quite well, right? So we don't need to be perfect. We can look at this market several ways. We're just trying to validate our thesis a little bit, make sure that we're in the right, frame of mind. Q4 low, highs of the range. You can see that this Q4 high right here serving as your midpoint, right? So if you were to take this and make a channel with it, which we could certainly do, you could say that this is how I should be viewing the market, right? So you need to see a recovery of the midline, right? Now we'll add we're gonna really do this one up. I'm gonna really key it up like so. Hopefully you guys can see these colors. Okay. Hopefully this makes sense. So this is a key area right into that gold pocket. Okay. Gold pocket can serve as support. It has in the past. However, what happens when we go below the gold pocket? We revisit these lows. They've been historically good support and resistance. So gold pocket is lost. We shouldn't overlook this speed bump zone here. However, our bias is that unless there's a sign of strength out of this region above the midline right here, so you can see that the Q4 high and the February low, which has been historically good support and resistance, then this bounce may just be a bounce before seeing the 2023 low. So we can definitely trade these areas. This is a tradable region right here at the gold pocket from a volume standpoint, right? So this is the area we want to trade next. In my opinion, we're trading this area. If this area doesn't give us the reaction we want, we won't take the trade. We trade the area below us, right? Very simple, level to level, step by step. Just identify the areas you want to trade and then trade the reactions. Don't preset. I think that's a mistake. And to the upside, we need to see 21,468 reclaim. So if I'm looking for intraday shorts, we even have the 60-day pivot up here, if you guys recall. There's your 60-day, which did actually operate very nicely on the move down. 60-day pivot was pretty clutch on the way down. Boom. It gave some nice scalps here and then turned into resistance. One final move above before back testing it, and down you go. So that was actually a really nice level. Right. So that's the area I want to see reclaimed. I do want to see this area of the chart. And I understand that, it may not be perfect. It may be a wick above, but I need to see it claimed on like a daily basis, living above, SR flip. And then I'm targeting these local highs and the value area high. Or if you wanted to do the fib thing, local gold pocket, right? And that's just high to low. Gold pocket comes in up here. Can't look for the gold pocket unless what? We're back above the Q4 high in the February low at 21,468. That's how I would view that. Okay. So very simple. No reason to long just yet other than intraday scalps. Hopefully that makes sense. Could we see the lows on the weekend? I mean, maybe. I think this is a pretty extended move to the downside. And a lot of times what you'll get is you'll get these like sideways chops for a few days, like right here, for instance, is a very aggressive move down, right? See how the similarities? Chop, 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 wash out, big reversion to the mean, back to support. See what I mean? So it does tend to spend some time down here when it comes into this region before making its move. So if we do something like this and bounce back up to resistance, you just got to remember not to FOMO into a very clear SR flip, right? So SR flip could be occurring here. You don't want to get caught buying this and then it come back down to support after it dumps out of this region. What do? We buy support, we sell resistance. Okay, very simple. I know we do all this other technical stuff along the way, but that simple concept will save you a lot of heartache. But for me, 19,224 in this region, still very, very interesting to me. I have not pulled the merged range on ATAS since this dump. I'll probably do that real quick. And then we'll move on because I know that I'm spending an awful lot of time on this chart. And, for me, this is all one giant range until it's not. And if this breaks down lower, I'm still holding a short from last March. So I don't care. I'm good. It makes me, it's fine by me. We're all Gucci if that happens. So I am still in my 16.6 long. If I get stopped out of that position again, you guys recall 75% of that position has been has had profits taken. So 75% of that position has been exited at 25,222. So it would be no skin off my back to see that position get stopped out in profit. I'd have no issues with that. It's done exactly what it's supposed to do, right? So it's all about position management and being patient. And then swing trading has been really, really nice with these big moves in this really big range. And so you almost have to, you can fall in love with the day-to-day, which you guys know, I'm up to like 110 trades on my day trading account that I've been sharing with people publicly. Win rate's like 79%. So it's not the greatest, but it's not like bad either. It's still pretty good. Last year's average being 81.8. Of course, you want to have a better year. So, but we're only 2.5 months in, so it's giving me plenty of time to continue to be consistent and hopefully finish the year above last year's win rate. Obviously, win rate does not convert to win percentage. You guys remember this is all based on the idea that you should be using risk management. So these small wins compound over time. But the win rate that I had last month was about 80%, and it did net me an account increase of 56% on that trading account, which is really unrealistic, because if you did 56% month over month, you would be absolutely a god. Like you would be very, very wealthy very fast. So you have to remember that incremental gains are best, and that you're going to have big months where you have a lot of like gains on the overall account. You're also going to have some months where you don't, and it all reverts back to the mean eventually. So you can't like take the big months and say, oh man, I'm going to duplicate this every month, increase your risk. Because that just leads to pain, unfortunately. But yeah, I have the TPO point of control still at 19,150. So I would imagine we're going to see that. Now the largest level of volume has shifted from 23K down on ATAS as well to match TradingView. So they line up now, which is great. It is coming in at, let me get that exact value, 20,000 even. 20,000 even is now the new point of control, which is what it was before. So 20K even is now the new POC of the range. The TPO POC is 19,150. And the TPO value area low is 18,807.50, and the volume value area low at 18,740, kind of validating the idea that 18,880, that little like zone right here, would be key. And if we come through those levels, you know, this doesn't provide the bounce, we may see this box down here, which is, you know, historically from the quarterly chart, which the Q4 and Q3 lows. Also this like December high, I believe is what this is, all showed resistance here. So, you know, that would give us like a pit stop before the yearly open, like the last, what's the word I'm looking for? The last hope, whatever you want to look at it as, before you're probably going to challenge not only the yearly open, but I think you probably take these lows. My bias would be if we see the yearly open, we're likely to make a new low. So these boxes right here are very, very important in a very simple fashion. So if there are questions, by the way, fire away in the chat. I don't want you guys to like feel lost, because I roll through these charts very quickly. But I'm hoping that you guys, you know, by showing my work a little bit, it's helping you guys understand how we're coming to the conclusions for a trading plan and what we're going to do in certain scenarios, right? So that's the idea. Now, I'm not going to trade for you or give financial advice. I'm only telling you how I'm viewing the market. So don't take this stuff as like gospel. There's 33 of you in here. Awesome. 24 likes. You guys are the best. You guys are the best. We did say we were going to look at some altcoins. I'm going to cover them in the order that they're in on this video. And I do want to mark out when I switch over, because I'm going to start adding the breaks in the video so that it says, you know, Bitcoin analysis, and then like order flow was covered at this time. You know, we're going to cover Matic, QNT, LDO, and Loopring today. So I'm going to do them in that order, but I actually want to track when I make that switch. And I did not bring a pen. I might just put it in my phone. Yeah, we'll just put it in the phone. It'll be fine. All right. And let me just open up a note. Thank you guys for being patient with me. I know that's probably not ideal all the time, but we've been live for 24 minutes. So at 25 minutes, we went to Matic. And we'll jump into some Matic. Jumping straight out the window. Matic, I've not entered any Matic longs. I'm still short on Matic. You know, you had the opportunity here for like some really garbage time bounces. And I let the group know that I wouldn't be entering any longs on this just yet at 5%. You know, while 5% is a great day trade, you really kind of, it's not going to give you too much here. You're now coming back into a region of the chart off of this shark harmonic, or not, sorry, bat harmonic. Somebody was talking about shark in the chat. I need to do a little more time on the Bitcoin harmonic section in terms of like what I'm looking for right now before I put anything out there like that. So yeah, this is your Matic chart. Now you have SFP'd yesterday's low. So the previous day low has been taken. Great reaction here. So now we're looking to see if this can actually recover any levels. But for me right now, I would be hesitant. Although with Bitcoin coming into support, I believe this is probably just a trend line or a channel that people are watching, if I had to guess. And that's not to diminish anyone's work. Yeah, they're probably looking at it like this, and they're probably looking for this right here at the point of control, right? So that's how I would probably see that. Let's extend it over, see what we got. Yeah. I see why you guys want the level. I'm just not that interested myself. Let's get rid of the fun. So I'm out of all 3 take profits from my short up here in this region. I've got 1 position size left open, and I'm going to close it at 50, probably 55 cents if hit. I should say if hit. I'm not gonna say it's going to happen. Stop loss is up here in profit. I think I'm setting it like $1.50. So even if I get stopped out, I still make a little bit on it. But yeah, I'm going to hang on to that Matic short and see if we can't come down to this lower target, take these lows, which is probably not going to mean, if that happens, it's going to take time for that to happen. Like it could take weeks to months. This could be happening where we see like a lower low, right? That would be the implication there. So we do want to see Bitcoin finding support and, you know, doing that whole bit. So let's take a look at Matic's Q1. We're at the value area low. The yearly pivot is the point of control. If this is a substantial bounce, what are we doing with it? Well, the 886 is where my stop loss is. That's not what we need to know. You know, I just don't think that's relevant. I don't find that relevant in any way, shape, or form. Yeah, your monthly opens all the way down here at 119. So I would say that point of control is very important at the yearly pivot, because your monthly opens just beneath it. You know, unless this thing, I would probably consider closing the remaining like 20% of that short that's open if the yearly pivot got recovered at this POC, just because, like, you know, it'd start to look pretty good above this level. However, I'm not sold on this just yet. We have come down to some important levels here. Like you can see, this is your most local daily demand zone. You know, if we box it off, right? So all we're doing is we're coming over here, and you can see this is the consolidation on the last move up. It was like the little flag below resistance. We could then extend this to the right. We have our supports, and you've come down essentially and tagged right into it. If you really wanted to be aggressive, you know, and say, well, it didn't work out, you could always say that you could extend it over to these lows as well. And now you've got your nice little box here. You could even get rid of that wick if you wanted to. You could say that this was a swing fail on the daily right here. See how that is? It includes this wick now. You can say this is be my box that you have to hold. You lose this box right here of 92.5 to 95.55 cents. And yeah, you're probably going to make that trip down. I think 83 cents would be nothing but a pit stop, but I think you would make that trip down into Pound Town at 75 to 71 cents. I don't know that it stops there. Looking at it, you know, Q4 was so tight. Q3, same thing. Yeah. This is big support right here, obviously, but I think that if you break it, you're coming back to this region of the chart, and we fill in that July in POC, and I get rid of this, the regression here. And you can see all these value area lows on the monthly here. See how they're all lining up, kind of confirming that this like local low here is going to be pretty well defended. And there you go. There's your local high even. So we just identified horizontal support using some charting techniques. Now look at all our local value area highs coming in. Boom, boom, boom. Point of control up here as well. Yeah, so for 1, 2, 3 months, this little box right here has really been good resistance and support as terms of like a standard deviation. So 68 to 70% of price action. And so it would make sense why it was back tested and why it's being held up as support now. So that's what you're bouncing from is basically this consolidation right here of price. However, I can't help but think that unless that yearly pivot is recovered, and we'll get rid of this, it's just hard to imagine we're going to be going much higher. So if there is a substantial bounce out of this, I would be keeping in mind that the 122 pivot has to be recovered. If it's recovered, we can talk about, potentially re-challenging these highs. But for me, I think that I'm still much more interested in like 75 cents just because I still think that Bitcoin, it hasn't shown me anything to make me think that it won't at least hit the low of the range where it's at between like 18.8, 19.2, maybe even as low as those, 18,090 to 17.5 region, and if that happens, that's what's going to cause this to come down with it. So I'm being patient on Matic. I'd want to see a couple days here of consolidation, some good buying and signs of strength out of Bitcoin potentially. And then I would be interested in taking a long potentially up to resistance in like a separate account, maybe doing some counter trend scalping, right? But on the high time frames, I want to reiterate this on the high time frames. This is just a lower high, and this is a lower low or a higher low. We've talked about this back in October on this coin. We got to the weekly, and I got way too much stuff on here, so we're gonna delete a lot of stuff, especially our SR boxes. Right, so this was my buy zone. Obviously, it didn't fill out all the way, but this was my daily demand too. Gave that in 2021, where I wanted to buy at. It's on the old TikTok still. Just had to wait a really long time. But when you look at this, something like so, I was looking at this as a channel. And when we talked about this back in October, I had talked about coming up like this and then making a lower low potentially, because you are technically still like range bound. But when you look at this, you could say, all right, I've got a, we'll call this a low, high, low, high. Now we've now made our first lower low, lower high. So either we're going to get a higher low and this becomes consolidation, or we will see a lower low, which brings us all the way down here into like the March NPOC, which is from like 2021. So that's very, very possible still, especially if Bitcoin is going to, revisit its lows. In my opinion, you could see some serious weakness out of this one. But what you want to see if you're bullish on this asset is you haven't confirmed this as a local high just yet. You thought you might have right here. So let's go ahead and get rid of this. We'll just do that for now. Let's do a little like market structure lesson right here. This is not a confirmed high, and it's not a confirmed high just yet. Let's get rid of this right here. Not a confirmed high. And why was that? You never lost your local low before you made that high. So we knew that if we lost this level of support, we were probably coming down to 52 cents and most likely 45 cents over time, right? And you're probably coming back to visit this area of the chart. So this was your key low. And we obviously identified it in several different ways using high time frame ideas from like quarterly levels, but this was your key low. And you are at that same position now. So if price does decide to revisit this area of the chart and it is lost, that's why you get my bias of I'm only looking for 52 cents, then 46, and then maybe as low as like 38. And over time, you could even be looking for the March NPOC if the markets really take the recession path that everyone's kind of scaremongering about. I'm not really in that camp yet. I'm only putting these on your radar so that you know the next steps, right? Like next tradable area for me realistically is probably down here. This is where I want to be trading at, somewhere in this region right here. And, again, 75 cents to like 69 cents. That's where I want to be trading Matic again, in my opinion, especially if we're going to be living below the yearly pivot and the 6M2 from 2021. So like this little like section of price right here. Okay. We're gonna put all kinds of shit on the chart today. So this is the box. You lose this box or you get back above this box, we can really start having the conversation about maybe this is a bear trap and it might try to push higher even. And then at that point, I mean, once you're back above this high, it's like there's really nothing between you and an all-time high, which is crazy to think about. I just don't see that happening. So I'm more biased towards coming back to this box down here. Get the bounce. Maybe you get several bounces off of it before coming down, right? And when we go back to our Bitcoin timeline, if Bitcoin's to remain range bound and we're going to see a lower price on Bitcoin, what did we say? We would likely see a larger range if volatility remains constant, much like it did above us right here. If you guys recall, we had this timeline all the way in right here. So looking for reversal, came back to the highs, all the way back to the lows before breaking at the halfway point. Okay, so halfway point, it broke down. We now have lost our timeline and prices expanded downside. And this is where I started shorting. I said, okay, this range is probably going to break to the downside. My first target's 25K, which was a really nice spot. And then down to, I was looking for roughly 20,688 just because it was an untapped yearly pivot. And then looking for anything under 16K really was next. So we look at this and say, this says that we could be, if we remain range bound, this could fuck around for a while, but we would be looking for the lows of this to come in sometime in the middle of the summer. So you got to be thinking about Matic. If we're going to see these targets, when do you think, how long do you think it would take us to get there? That's 3 months away. So in 3 months, a lot of things can happen. So we have to be ready to change our bias if we can recover this level and live above and start targeting these areas up here, right? However, if we don't recover this and live above it, where are my targets at and how long might it take me to get there? It could be several months, could be a whole quarter's worth of price action before seeing some of these lower valuations that we've been looking for, right? So keep a very, very open mind with this. You know, I'm trading this primarily as a range. It's why I'm not like saying that it's definitely going to these prices. I'm just trying to get you guys to work out in your heads how this is going to reach these targets and why it will potentially, and what you need to see to confirm that bias, and maybe what you need to see to confirm that you're wrong about that thesis, right? It's just a thesis as of right now. It's not, it's actionable because we took the trade up here. We've already paid ourselves. Now the rest of it is, I'm going to let this run because I've made sure it's a profitable thesis. Now I want to see how far I can take my thesis before my thesis is wrong, correct? That's all we're doing. And we're just positioning accordingly. And now we're looking for these lower valuations. So easy peasy on Matic, probably a little more time on Matic than I meant to spend, but I'll never be married, low key, so you'll never dance at my wedding. But there's gonna be a lot of alpha in this one. So you know, for a freebie stream, people are gonna be getting quite a bit out of it. 28 of you in here still, so at least we're hanging on to some of the audience. 27 likes. I love you guys. Don't forget to share it with your friends, all that jazz. Let's move on to QNT. That's a big popular one. You guys are gonna love this one. What time is it in the video? 38:22. Holy shit. 38:30 for QNT. So we'll move over to the QNT chart. I know you guys all love your quant. You might not love my thoughts. Next place I'm looking to bounce from, we're kind of already in. We're really just playing ping pong here right now between some of the levels. If you guys recall, we had the 2023 Open, which we front ran by a few cents here. So, you know, realistically, you could have been trading this. You've come back to the Q4 pivot, right? Nothing interesting is going to happen on this chart without, and these are only my opinions. But if we also recall why we were looking for this level here, structure range, overall point of control, right? So we've now hit the range high, back to the value area low. We hit major resistance here at that 3-month SFP. We cover it almost every time we cover this chart. 145.78, back to the point of control. You lose the 2023 Open, and I don't see any reason why you won't take this low right here at 94.41.6. I would be looking for the value area low of the range and looking for the SFP of this box, right? And you can see how important this box is. Let's get rid of this. So just remember the value area low is there, and the 2023 Open is your point of control. What happens if we live below this box, guys? what happens. So we really can't be losing $92 to $96, specifically $94.68, the 6M2. That is the level. If you lose that, I do think it's a quick trip down to Pound Town at $63.61, and then 53 after that. So I'm very interested in potentially trading this if reached. I have not taken any alt positions today. I know that everybody's going to say you got to buy when there's blood in the streets, and I totally understand that. I am more patient. I don't like to catch falling knives. So for me, I'm going to be waiting for my levels to either be hit or a sign of strength out of the overall market, and then I can act accordingly. Find a local setup and get long and enjoy that trade. So for me, I laddered out of this potential, push up. I was looking for 166. It did front run it, but I got out of around 160. So you always front run your targets a little bit. Main reason why we front run that target, guys, we go back to the 3-month chart. Hopefully this doesn't get too messy. This little guy right here was our Q. See how we have not closed a 3-month candle above this level. Now you can see why the 2023 open is important. You lose the 2023 open. What are we looking for in the next really support? All the way down here at the 6M2, $94.68. That's the local Q4 low, right? And if that box is lost, bad things happen. Where are we going? Probably down to $63 to $53. Does this provide any value in terms of what the range could look like on this asset? Yes, it does. Again, back to the fun folder for me. When we're looking at harmonics, we had a deep crab and a deep crab. We had 2 of them back to back. We called both of these out in advance. It was juicy. And $40.40 was our global POC that we called out like fucking 6 months before it hit, looking for 40.40 potentially, and you got it. So looking at this zone of support, what happens if we lose this zone of support? And you could already see the structure here. This lower high. What you don't want to do is start making lower lows. You're coming down to the back end of this. It's not going to look great in terms of price, but that's when you want to be buying. You're at the EQ of your trend from this harmonic, right? So you can see that you're respecting this fork quite well. Look at this. You get back above the midline, 25%, or the midline of the next range. If you're looking at this as 2 channels, basically, because that's all this is, just projected. You've come back down to the channel low of your upper channel, showing us that, well, the 2023 open being the point of control is fairly important. So if it bounced out of this region, I wouldn't be surprised, but I'm really not in love with this chart until we start seeing, and this is not a popular opinion, I want to see things like a monthly candle back above 145 locally. This area of 131 and 124, this last local high would need to be claimed as well. But you have your February NPOC up here at 140. So I'm going to be extra conservative with QNT because of what's down below these levels, right? So I'm going to make one line here. What is below here, guys? There is nothing but air and supports down in this region. So that is why I'm being cautious on QNT, is this right here. This is that key support. I want to see that reaction. Could you take intraday trades as long as you have stop loss? Yes. If you're like, this guy's an absolute clown, I only buy macro positions, I'm going to hold them for years because QNT is going to be $1 million, which I've heard stuff like that before. Do you? This probably isn't the channel for you. But not a big deal, right? So that's why this is such an important zone to hold, right? We now covered exactly that. So our thesis is lining up better and better. Let's go ahead and turn on the other pitchfork. Look at that. There's your bottom showing you. Again, this is the trend from our bullish case, right? So when we had our bullish deep crab right here, there's our trend. What did we do? We went to trend high, back to the EQ, down to the EQ of, let's actually make this the right colors. There we go. There's your EQ. You're riding it out back to the midline. Okay, now we're looking for the bottom of this, which lines up very nicely with the EQ of our other trends. So we have 2 trends going on based on 2 patterns that have completed and played out, right? That's all we're doing. Fork off of this guy, fork off of this guy, right? So same thing, and then we're just playing accordingly. So what might be taking place is something that I've been looking for as an idea only. I've been looking for this, and it's not really set properly for time. I'm just looking at this as you've had a huge run up, a big move down, back to the midpoint at about the 50% retrace. Now I'm looking to take this back down to the bottom of the range. So this is all one big range right here. I'm going to use the brush for this. This is one range. Okay, that implies that this is your range, if accurate. Where do I want to be accumulating in this range is usually the bottom half, right? So down below this blue box, that's where I'm looking to be buying. I'm a buyer there at the bottom of the range. And then I'm looking to see if this range is accumulation. What happens with accumulation ranges is they expand. And this is where harmonics play a role. We now have our range high. We have our range low, or the A, B, and C legs. And we have our previous impulse zone, X. We know that if price gives us certain ratios, that we can expect certain expansions. And in this case, you would expect to see a return to your prior impulse to fill in some of these inefficiencies that you have, because you haven't taken any of these highs in such a long time. There's a lot of stop losses up here potentially. So that's what I'd be looking for. The timeline on this is the tough part. So I'm really interested in this one down here. I'll change my mind if we start recovering this, and I'll trade it back up to like maybe the range high here and trade these local targets, right? And then I'm probably no longer looking for something like this idea, right? So for me, that's the completion zone. You're still not making an all-time high, and people are gonna fucking hate that, but it is what it is, guys. I'm not bullish enough to call for any all-time highs on any of these assets because of the environment that we're in. That doesn't mean we can't have rallies and we can't trade really big ranges. As long as we do it intelligently with good risk management, we stand to make quite a bit of money off of these. And this is where the bear market is going to separate you guys from other traders. That's where I became profitable for the first time when I started trading, was the 2019 bear market. And it was eye-opening to be both short and long at the same time, you know, having really large swings. And that's kind of what I'm doing here with QNT. So I managed to get into this guy here, almost at the exact bottom. I did take some profits up here in like the 127 range. However, I was able to hold some of it for this region here. Then I sold. And now I'm looking for my next position. If you guys follow me, you know that I've been taking positions here. I took a couple positions like right here, like little intraday, you know, like 8 to 10% moves on like this one. This one was a little bit better. But just looking for my next opportunity. This could be it. I am going to wait to see what more, you know, if there's more data, because I would like to see if we cross below this little blue box, we come back to these lows and I get a chance to accumulate down here. I'm not accumulating this coin because I want to hold it for the next bull run. I'm accumulating it because the levels are so clean and it's a good trading chart. I don't really care to accumulate things like QNT or other highly speculative assets. You know, the fundamentals of these coins honestly don't matter. No one wants to talk about that. This is a hype driven cycle, and this is a very, very hyped up community coin. So to me, I'm not buying into any of that. I don't drink Kool-Aid. People can take that for whatever they want. I'm going to continue to trade this coin accordingly and take profits, because all the people that were like, oh, I dollar cost averaged into QNT this whole way down, I got a great average, probably didn't take any profits up here, and they're about to be right back where they were, you know, and they're going to be like, oh, I'm going to buy more, but they didn't. They bought this whole move up probably because they thought it was going back to people on Twitter were like, oh, QNT is going to $10,000. I'm like, what is wrong with you guys? Like, do you know where we are? But, you know, those are the accounts that get engagement. So you're at the point of control. You're at a really big inflection point at that 2023 open. This could be a good bounce, but I'd realistically still need to see 145 recovered before I get excited about anything. And that's it. You know, that's the QNT analysis. I'm going to look for, you know, some patience plays and see if we get those lower valuations. If not, I'll reevaluate what trade I want to take, and I'll go from there. But even if you got a bounce, here's your local gold pocket. There's your February NPOC. There's your 3-month pit stop. It just works out really, really nicely. That would be the next area of interest for recovery. And it's also right in line with our really high time frame recovery trigger for any further upside on this asset, which is that 3-month SFP at 145. Let's actually look at the February range real quick. I don't remember if, yeah, I have. Let's look at the February range really, really quick. Yeah, look at that. You've got to be living back above 124 and 131, which was the, if you guys recall, the yearly pivot and the 60-day pivot that actually caught this top very nicely. So you know, this like zone of price here, it's a big zone. It's like 7-8%. This region gets claimed. I do think you have a free ride up to like that 140 to like 145 area, but I'm not trading it that way right now. I'm just not in the right mode setup wise to be trading QNT off this level, and that's okay by me. waiting to see something out of Bitcoin, which we are getting a bit of a bounce. So you can see that here. Still waiting to see if we come down to this level over time, though. So going to remain patient, see what happens with those. But yeah, this is support till it's not, guys. But if you lose that, you know, you've really got the risk of coming down here to the structure support. And then we play the game of bounce or go to much lower valuations. So this is just a high time overview of the chart. Take it for what you will. You know, don't crucify me on the intraday moves. This stuff usually ages well over time. And that's the hardest part for almost everyone, is the time aspect. We'll catch you later, Mike. Low key, that's a tough one, man. There is no such thing as like just a hard, fast candle up. What do we say? We don't chase big candles, right? So this is clearly already a strong reaction. You would have to be dove into like the 1 hour to see it. You've got like a little like falling wedge double bottom. I know you're a pattern trader, so we'll throw that out there. You go down to the 5, and what you'll notice here is slightly higher low. And then once you've taken this low right, or this high right here from a market structure standpoint, you know, that's a good sign of strength. You've come back below it. Now it is support. You could easily find an entry, and then you're just targeting your local highs like this. But I'm not going to trade this on an intraday right now. So I'm going to look for lower prices over time, let Bitcoin do its bounce. And if Bitcoin doesn't do anything for me on a bounce on these high time frame areas, especially like this 21,000, like 21,000, we'll even call it 659, like this little zone, this midline right here at the Q4 high, February low. I'm just not going to sweat it. It's not a big deal. I'm going to let the altcoins do what they're going to do. Yeah, QNT is what it is, man. I think it's an absolute dog shit coin, but I'm going to trade it. So nobody likes to hear that, but I think that those large community coins are probably the worst ones over time to invest in, and you can see why. And XRP, unfortunately, is the biggest example of that. So not to ruffle any feathers, but you know, having been in the space through a few cycles, hype coins like that with hyped communities, not great, man. Not great for the long-term, long-term bag. LDO was the next one. That's what we were on before we changed over right when we got here. So yeah, LDO, we were looking for $2.05. It did front run our target a little bit. So does it have to come down here and hit this? I think it will. Again, you're getting a bounce, so be patient. What happens oftentimes on bounces like this is a big bounce. So this is a perfect example. Just like with QNT, right? There's your low. Let's turn off that magnet. There's our low right here. What happens? Big bounce, new low made. What are we seeing? We front run our support a little bit here. Might get a big bounce, probably come back and take that low. I'm interested in this area of the chart. If this area of the chart is lost, I'm really not interested in this one for quite some time. Like a fairly good amount of time. Probably just looking for the 2023 open again. So anything under $1.84, and I think that this whole little like move right here is going to get run pretty hard down to like the low $1 region. When did we start covering LDO? Shit. We'll just call it 52 minutes. I'll fix it after the stream. LDO is not going to be too much of a deep dive here, mainly because there's just not that much to talk about. Yeah, look at that. 157. Yeah, so if you lose 184, I guess we should talk about the $1.50 to 57 cent. Pit stop. We can get rid of this guy. And this guy. And we can even get rid of this guy. Yeah, you lose 157, you're losing this market structure. So for me, 184, I think 205 and 184 really are the key levels with pit stops along the way here at 157 and 150. Otherwise, you're probably coming back down to the low of this range at about 95 cents. Yeah, that would be supported there. Did I pull a global on this? Feel like I did. Well, I did this one completely backwards, didn't I? Yeah. So still the key spot to hold on to is this box, 184.205. Nothing's changed. You lose that, and it is a quick 30-cent drop, in my opinion, down to 150 to 157. But I do think over time you probably make your way to the bottom of these candles here, into that 2023 open and quarterly level. So that is LDO, and we'll cover Loopring. Loopring's another one we've been eyeballing a little bit for opportunity. We are 55 and some change in, so we'll go ahead and mark that off as well. That way we can keep up with the new format of marking everything out and doing our due diligence for the community so they can find this stuff easier. So there's our box. Good reaction out of it, actually. I like this one because you've taken this low. I don't like it because you left these down here. Was your gold pocket, like zero response out of the gold pocket. And so we can now probably get rid of this box and just say that the quarter one pivot is our key level. And it makes sense why. One, it's your average of price for the quarter. So we've got this one relevant for the next 20 some days. Living below that average is not a good look, right? It's just not a good look. You do have some upside targets potentially. This would imply a bounce out of Bitcoin and the rest of the market, maybe a mean reversion back to like the gold pockets. And look at that. There's your gold pocket high to low to these. If we start seeing some recovery of like 29 cents, living above that old box there, so something like a move back above this region, and we don't see a breakdown to these lows, we start seeing strength in the market, I would consider targeting anything above these local highs at like 37 cents, because that is also your global, close to your global point of control at 39. But realistically, I would be looking for the overall global POC and the February NPOC up here around like 40 cents. I think this would be a very actionable area, and then we could look for lower prices over time. What does this imply? If you guys recall, implies that, you know, these lows and these targets we're talking about might not get hit for 3 months. The same with QNT, same with, you know, LDO, same with Matic. It's going to take time potentially. So you could see these big reversions back. I would just be patient and not try to catch a knife, because alts get crushed even harder than Bitcoin. Because if you lose this quarterly low here at 26.7 cents, this turns into resistance. I mean, while you have the 2023 open here, I really don't see anything to stop you from coming down to the overall value area low around 14.4 cents, which is right here. Okay, so that's where I would be looking to on this one. Just remaining patient. Yeah, that's your global range, because you've got some overlapping data. What would change my mind? Realistically, a recovery of like 39 cents, you know, somewhere in this region. I just mark out this local daily high here, 37.6. And I would be, if I was getting the opportunity to get long in here, that's a 20% bounce from the 6M1 to here. I would be willing to take on that risk if we set up some good market structure here at the bottom. Like we have like a good market structure for March and a good range for March that I can trade off the value area low of or something. Then I'd be looking to take this one up into this region. Until then, I'm really not into catching this falling knife just yet. I'm not going to be laddering. I'm gonna hold off just because I think that you could come down to these regions, and you know, even at these lows, I'm not like an automatic buyer, because look at the structure of this. Low key is going to have an absolute shit fit. You've got his favorite head and shoulders here. It doesn't mean they won't play out, but this one's huge. This is a weekly chart. Okay, so that's why you need to see this market structure holding. If you don't, you've made a top. You're now coming down to set in some form of a lower high, which I was hoping to get the lower high up here at the value area high of the range. However, one thing you've done after setting in this like overall global range, guys, and we'll get rid of these key levels, is you've not come up and tagged your value area high since breaking in. You also haven't tagged the value area low since coming back into it. So which one will occur first? You need to be living above the point of control to consider the value area high, which would be a really nice opportunity potentially to short. Be upfront with you guys. This would be the greatest opportunity to short. Be up in this region. We're in the logs. We'll get rid of that. Oh man, that's so far up there. That's not happening. I think the best way to do this is going to be this impulse from March. And I think we talked about this on the stream when we built it. I just need to know where I put that, because I know I put it somewhere. Unless, nope, I didn't. So we'll just redo it. This is your March impulse from last year when we had our like little local high on Bitcoin as well. There you go. There is your gold pocket at the value area high at the April NPOC. It's why this box is here, right? That's why we have this box. So we can just say, if price can recover 37 to 39 cents, even though it's a de-risking zone for me locally for a short, I would become somewhat bullish above that price if we can like hold it as support, and I'd be targeting up here. And that would imply a bigger bounce out of markets. So we'd have to see that kind of going hand in hand. So I either want to trade from up here, in my opinion, or I'm going to be patient and trade from the low of the range. But I would be cautious, of course. Always got to exercise caution when you have a chart that has this giant empty space below it, because if you lose the value area low at 14 cents, there's nothing to stop this thing from coming down to like 7 cents, maybe even 2. And that would be like deep bear market. Like, oh man, Bitcoin's going to like 9K, 10K, which isn't out of the question. It's also not something that we can look for right now. We can only just say, could it happen? Sure. Will it happen? Nobody knows. We're going to locally trade these levels like we've been talking about. So you're now back above the previous day low on Bitcoin. So if you're watching this one for invalidation, this is like an area at 20,024, which is also the ATAS point of control you want to hold. Go down like the hourly here, 5 minute, whatever you need to do. You can see this is the previous day low marked out, resistance, resistance, deviation, resistance. Now you're getting back above it. So if you return to this level, you need to see it holding. Otherwise, you may come back down to some of these lows, right? So careful in this region. A lot of little chop here in this zone, like right here. Okay, so this is probably going to be your range somewhere in this region, something like this. And you just want to be careful that you're not buying up here locally, as you know, you can find yourself getting caught, right? So careful with that one. But yeah, that's LRC. Hopefully that was helpful. I'd be cautious below 14 cents if that's reached. I would be very cautious. I'm not buying just yet, even though I think we're going to get a good reaction out of this zone. I just want to see what we're getting in price before I pull the trigger on some of these alts, because there's nothing worse than getting into a bunch of alt positions and then getting washed out of them, because you're going to lose a fair amount of money on those, since they do move a little bit more than Bitcoin. So I would be cautious for now. I'd be patient, I guess is a better word. Be patient. The setup will come if it's going to be there. If it's not there, you just have to be patient a little bit longer. When I set a stop loss, what percentage do I put in there? Oh, you're talking like what percent? Like, do I incrementally let my stop losses get hit? I don't, unless that's part of your trading strategy. I'm a hard stop kind of girl a lot of times, but the main point of a stop loss is that wherever it is, you're comfortable with that percentage of capital being lost. So let's say that your risk on the trade is 3%, meaning that you're going to lose 3% of your capital. If you lose the trade, you have a 3% stop loss because you're trading spot ideally. If it takes you out, you just look to see if it's going to give you an entry, like maybe it stopped you out, but there's another bullish setup and you still think your bullish thesis is active. You can definitely take another trade. Happens all the time on shorting. Like the Sol chart is a really good example of this. Things like this do happen, but you'll see them happening. Like, you would have had to take this trade a couple different times if your stop loss was too tight. There we go. Stop loss was too tight. We were looking for this box right here, the Q2 and Q3 low. This is your SFP, okay? See how that came in at the value area high? So if you shorted here and didn't pay yourself back into the 6M1, which would have been your first target, stopped out. Well, if your stop loss is like directly above the high, which on a case like this, a lot of people's are, but you got your entry here. Second trade is even better. It's an SFP. This was the target, this little like speed bump zone. That's what I had lined out a couple weeks ago. Said this will be support. It was value area low. So you've at least paid yourself. But overall, our thesis is it's coming down to this blue box. So we have to be patient. We are keeping our stop loss in place. But if it gets you again, you're taking this trade yet again, even on this second candle closure, especially right here, you're trading it back down to where? Take profit again. We got a little bit of a bounce. However, this time your stop loss doesn't get hit. So you've taken 3 trades. 2 of them have been stopped out. Ideally, you managed to pay yourself at least once. But if you didn't, this one trade right here, if you're using good risk management and not getting wrecked on these stop outs, will make up for those 2 stop outs. Like if you're losing 1 to 3% of your trade, boom here, not a big deal. However, you finally get the one that you want. Now you're looking to trade it down in here. This will make up for those 2 small losses, because your losses are small, but your win was big, right? So sometimes trading isn't about being perfect. Sometimes it's just about an idea and knowing when your idea is invalidated. And on this one, the idea was never invalidated. You never flipped $25.86 into support. You never closed above 26.60 after the initial swing failure pattern. So you continue to look for shorts at resistance because it's giving you the short setup like perfectly. And then you're looking to identify your targets, and first targets are always going to be something like this, so if you're taking the short position, even if you don't get a perfect entry, it's like 20, like right here, stop loss goes above the high. And now you're looking to take it down into this box, and when you look at this, it looks easier than it is, but you got to look at this and say, this is a 7-to-1 risk to reward, very, very good. Even if you get stopped out on this once or twice, that's a big move down, right? So you can definitely enjoy that. And even just to right here, okay, not bad, almost 4-to-1. So that's how you would have been doing something like that. That's how I trade anyway. Now, if there's other people that do it differently, I'm sure you just make sure that you're working at your risk percentage, knowing that, okay, if I enter this trade idea and I don't take all of my tokens off the table when I hit a stop loss, I only take a percentage of them. Make sure you know that if you have another stop loss you're going to set, like you set a 25% stop and a 25% stop for the next 25% of the position and so forth, that you know how much total money you're going to lose if all 4 stop losses are hit, because that can definitely happen. Yeah, sometimes you don't get back into third time stacks. You don't have to. No one's telling you to just keep trading, because like that's not a good idea either sometimes. But if it gives you the proper setup, it's there. The only thing you guys can control out of all of this analysis and out of all this ideas for trading is how much money you stand to lose, right? You don't control if you're going to win the trade. So you can't control how much money you're going to actually get out of it. But you can control how much you stand to lose in the moment a loss occurs, right? So in the moment that you're wrong, which is going to happen because we're all going to be wrong, you have to be able to mitigate against, collateral damage, so to speak, or damage that might be more impactful than it should. So that is it for today's live stream. It's a little bit longer than I wanted, but I'm going to divvy up the time slots, which is great, so that everybody can actually enjoy the stream a little bit better, and we'll go from there. So if you guys liked it, do me a solid, hit the like button. If you're watching it back, leave a comment down below, and I will catch you guys in the next video.